Good evening once again, guys. Today we're going to review our the lessons that we have discussed so far on risk and return. What have we learned so far? First, we have learned how to download stock prices from Yahoo Finance, and we were able to download the price of Apple up to Intel and even Standard and Poor's 500, which is an index which we say is used to as a proxy for the market itself. And what do we need Standard and Poor's for? We need it to compute for the beta, which is a measure of the sensitivity of the stock related to the market itself. Okay, so we're using this stock prices, and we said that in finance, what's analyzed usually is the returns of the stock, the performance of the stock in terms of returns. There are rather a few researchers studies that focuses on the price. Most of the researchers that I've met are really focused more on the returns of the asset. So what we did last time was to we also learned how to plot using Apple open, high, low, close, which is the data that we get when we download from Yahoo Finance. We learned how to plot the open, high, low, close using Excel, the candlestick. You can also include here the volume, and there are other plots that you can use in plotting stock prices. But of course, there are other softwares that are better equipped as compared to Excel. Okay, let me just show you, for example. Okay, I'm flashing here on the screen. This is our software. This is what we use in my other subject. So in case you're finance, most probably if I'm the teacher, you're going to meet. Okay, let me just show you an example of what we learn in finance as regards, let's say, downloading stock prices. Okay, I'm sorry, it's okay. Sana hindi nag-hang. Okay, for example, just an example. Okay. I'd like to even encourage you guys to learn how to use R. If you're a business student, in whatever field you are, whether marketing or business management. Okay, example lang to, guys, no? So in this software, for example, we also downloaded here we downloaded Apple. We downloaded Apple and we plotted Apple also. So let me just show you, for example, quickly. So if you're using R, there are many packages that you may use. Okay, so let me, for example, this is just a basic command to get Apple, and you specify the dates when you want the dates of the Apple prices, and where's the source? I'm saying Yahoo, and then periodicity. Do I want daily or weekly or monthly? So this is really much more convenient than going to Yahoo Finance and manually choosing is it daily, weekly. Here in just this short line of code. Short line of code, then you'll be able to already download the stock price. So just to show you, just to show you this. Okay, for example, if I'm going to sorry about that. Okay, just as an illustration, I'm going to download now Apple. Okay, I'm giving it a name, Apple, and then I'm asking R to get the symbols of Apple. I specify the dates. I specify where R will get it, and if it's daily data, okay, etc. Okay, there, and just with the click in R, Okay. It will take a few seconds, and then it will give us the Apple stock prices. You can get at the same time several. I can add here Apple, Microsoft, Facebook, Tesla, all in just one code. And then it will automatically give me all of those stock prices with just this simple R code. So this is a freeware, R and R Studio. If you're interested, I'd like to encourage you to learn it because it can, it has lots of capability, and best of all, guys, it's free. No? It's free, and there are several, and there are so many packages that come with it. Okay, sorry for the bit of delay kasi siguro na na-stuck to kasi hindi ko nagalaw since yesterday. Okay, let's give it a few more seconds. And then I'll plot this one once it's done. Okay, you can see here that the object is now here. There, Apple. Okay, so I'll just plot this. Okay, plot, still running. Bagal siguro yung internet ko ngayon. No? Yeah. Usually guys, ang bilis niyan eh. Okay, you can see the green line here. It means that it's still running. Okay, I think nag-run na siya. Tapos andito na yung object natin, Apple, and then take a look at the plot, for example. Uh-oh, okay. Nag-hang. Okay. Anyway, guys, okay, hindi ko siya na-prepare bago tayo. It was just more of an afterthought, ano? Naisip ko lang na ipakita sa inyo that there are other more powerful softwares that you may use aside from Excel. Kasi si Excel nga kung tutuusin, napaka elementary, napaka kindergarten to as compared to the other softwares. Anyway, I'll just go back to that later on. Then what we did was to learn also how to compute for the returns. No? Sabi natin, two types of returns for our use, discrete and continuous. Okay, ang discrete, guys, is you just get the ratio of the value at time t divided by value at time t minus 1 yung previous period. It depends on daily or weekly or monthly or yearly, depende sa gusto mong i-compute na returns, pwedeng daily returns, or we can use the continuous returns where you get the log. Sabi natin, mas ginagamit to, no? And there are specific reasons why it's better. Baka andyan na yung chart. Ayan, guys, yun na yun. It's already there. Okay, so if you can see, guys, ayan, no? Much better than the Yahoo chart. So this is the volume, and these are the charts. Hindi lang masyado makita, pero pag i-zoom natin, for example, ito, si Apple, i-zoom lang natin ng December lang of 2021. Okay, let me plot that. Okay, and then you can see here. There, di ba? Ito yung candlestick natin, ano? Yan. Kasi sabi natin, i-plot lang niya yung December of 2021. So you can see here yung green, ibig sabihin tumaas yung price, yung orange dito, bumagsak yung price. And then under here, you have the volume of transaction. Okay, so among the so many things that you can do with R and R Studio. And this is the one that we use for investments analysis or portfolio analysis, no? Sa finance. So if you're going to shift to finance later on, you will meet these things and you learn trading, investing, and using these tools in order to, let's say, track your investments, etc. Okay, so let's go back to our lesson here. All right, so we learned how to compute for the returns, and last time what we did was we computed for the returns of the stocks and even the the index, the S&P 500. So we computed for the average log returns. We computed for the variance, which is, sabi natin, di ba sa formula sa stat, it's the summation of the returns minus the average of this set of returns, square it, and then divide by n minus 1. Then if you get the square root, you get your standard deviation. Okay, we use the standard deviation of the returns. Okay, take note, guys, we're not computing the, we're not using the stock prices, but rather the returns. And then we learned how to compute also for the coefficient of variation and then the beta. We said that the beta is the sensitivity of the stock relative to the market. Now, medyo off yung ano natin, yung mga beta natin kasi sabi natin ang beta is a measure of the sensitivity of the stock as compared to the market. So it's actually the slope. So if we plot the returns of the stock, let's say Apple and the market, which is represented by Standard & Poor's 500, the slope of that will actually give you your beta. But if you recall, guys, when we were computing this, yung beta ni Apple is 1.2. No? Pero sa atin, ang layo, 0.26. Now, it has something to do with the data that we use. Tayo kasi ang ginamit natin, 4 years na weekly data. Dun sa Yahoo Finance, ang ginamit niya, 5 years na monthly data. So, I did some experiment, kasi dati ganun talaga yung ginagawa ko, tapos tumatama dun sa beta ng Yahoo Finance. In fact, dati 3 years lang 3 years na monthly. Pero ngayon, sabi sa Yahoo Finance, what they're using is, okay, tingnan natin to let me show this to you. I'm now at 3.2 worksheet. So what I did was to get the Exxon. Okay, Exxon Mobile. So meron ditong site which you can refer to. This is just a note on how does Yahoo calculate data, which is what we did last time. Ganun din yan. Okay, sa Exxon, ang sabi niya, ang beta niya is 1.35. So this means that for every 1 unit, 1% increase in your market, there's a 1.35% increase in your Exxon. So it's more sensitive than the market by 1.35 times kasi kaya nga yun ang measurement ng beta. Now, what I did was I downloaded yung 5 years na monthly. Ito yun. So it's from February 1, 2017 hanggang December 28, 2022. So that's a 5-year monthly data, 21, 31, 41, etc. Okay? So I got the Exxon closing price because that's what Yahoo Finance uses, yung closing price. And then the Standard & Poor's close. And as you know, we compute for the returns. So kasi returns talaga yung ginagamit natin to compute for your beta, not the stock price. So I just use the simple returns, yung ratio ng price at time t divided by t minus 1. Okay? Also for GSPC. So kinuha natin lahat ng mga returns nila. Tapos, okay, what we did here was to get the slope. Yeah, it's just a slope of your Exxon and your GSPC, slope of their returns. Okay, and we got 1.05. Okay, 1.05. So hindi pa rin tumama, no? Hindi pa rin tumama. So I'm still in the process of trying to once again decipher. Gusto ko kasi mapalabas yung 1.35 so that I know, okay, kung paano ba talaga niya, anong ginamit niya. 5 years, is it beginning of 2017 to end of 2021? Pwedeng ganun din, no? So I haven't done that, but it's some monthly data. All right, but it's closer than yung pag-compute natin dito na dito kasi 0.26 yung beta natin dito eh. Pero dun sa Yahoo Finance, diba, if you recall, it's 1.2. So, parang ang layo niya, no? At least ito, guys, yung monthly data na ginagamit na 5 years, medyo malapit dun sa, naka-reflect dun sa Yahoo Finance, no? Dito sa 1.35. Okay. And even guys, I tried to use yung adjusted close. Okay, I used the adjusted close ito, got their returns and hindi eh. In fact, mas maliit siya, mas malayo dun sa ano. So that's something that maybe you also would like to consider computing as an exercise. No? Okay, now take note guys na itong slope na to, there's another way that can be obtained. If you recall from your stat, meron tayong tinatawag na covariance at saka variance. I don't know if you recall that, but let me just have a brief review. Guys, ano ba yung variance at saka covariance? So let me just use my digital pen. Review. Okay. So I'm not sure if you recall guys yung formula for hindi yata naka-engage yung ano ko, tablet, yung tab. Okay. All right. So based on what you learned in statistics, meron tayong tinatawag na covariance. At saka yung variance, alam nyo, no? Variance is, so let me write the formula, sigma squared. Okay? And we need the GSPC. Kailangan natin dito yung variance ng GSPC, which is equal to the summation of returns ng GSPC. So yung mga individual returns siya minus the average, no? Average returns of GSPC squared over n minus 1. Okay, so if you recall guys, ito yung ano, of course S dapat to, no? S. Pero ginagamit ko lang na sigma. Kasi strictly speaking sa stat, di ba, pag sigma, it's the population, so you use n. Okay? Alright. Now, ano naman yung covar? Yung covar guys, covariance. Ibig sabihin, it's a measure of how related or how correlated two variables are. So ang symbol niyan is sigma, and then we have exon and GSPC. So that's how we denote covariance, no? And it's equal to, pareho din naman yung formula, ang kaibahan lang niya, okay? So the return of exon minus average return na exon times, this time, i-cross multiply natin siya sa return ni GSPC minus return ni GSPC average, no? Average return GSPC. Wala nang squared. Okay, ito kasi squared eh. Parang 2 times natin ginawa ito to itself and then divided by n minus 1. Okay? So the formula for the slope, or in this case, sabi nga natin yung slope, it will give us the beta. Okay, so yung beta sa symbol sa Greek is beta, okay, is equal to, it's equal to the covariance of your exon and your GSPC divided by the variance of your market, which is GSPC. So that's the formula, guys, for the slope, just so you know, no? So here, okay, tingnan nyo yung formula dito, guys. Ang ginawa ko dito, first, I computed for the covariance. So it's the covariance of your asset returns and your market, okay? This one is the returns of Exxon, okay? Tapos yung nasa F naman, yung returns ng ano natin, ng market, which is GSPC. So that's your covariance. Tapos ito naman, the variance of your GSPC. So consistent with the formula, ito yun, var.s ni GSPC. And when we get that quotient, no, it's equal to the covar of your Exxon and the GSPC divided by the variance of your GSPC, you get the slope, which is pareho lang, 1.05237. Okay? So just so you know, guys, yung slope na yan na kinuha lang natin sa ano, it's actually the covariance of the two variables and then the variance of the market, which is GSPC. Okay, any questions dito guys? Ano? So hindi pa rin natin na-hit, no? 1.35, pero at least malapit na. Yung ginamit kasi natin na monthly, weekly na 4 years, ang layo dun sa ano eh. Ang layo dun sa result sa ano natin, sa as compared to your Yahoo Finance beta. Okay, so siguro a little more trial, no? Kung saan ba nakuha tong 1.35. No? Now since this is monthly data, nagbabago yan every month, no? Every month kasi kung rolling ano yan, rolling past 60 months kasi 5 years times 5 years na monthly, so that's 60 data points, no? Kung rolling yan, nagbabago yan every time na may natapos na isang buwan. Okay, so let's see. Let's now go to number 4. 2 asset portfolio natin. Okay. All right. So ito guys, you'll notice guys that the returns is different. Ano nagbago dito? Now take note, this is weekly data. No? Weekly data to. And usually guys, we're not interested in the weekly data. What we're interested is in the annualized data. Dito tayo interesado sa annualized na data na to dito. No? We're interested in this annualized data. So what we have to do is to convert yung returns natin, yung variance natin, yung standard deviation natin into annualized data. Yung coefficient of variation na, it will just follow yung value ng standard deviation at saka yung returns. Yung beta, ganun pa rin. It's still the slope. Okay? And then, ito yung formula lang to, no? ng variance covariance. Okay, so let's see guys, how do you compute returns into annual? How do we do that? Okay, there's may site dito, no? I'll leave that for you guys to look into. Yung trading day, it counts how many days a year nagkakaroon ng stock trading. Although ang context nito sa US, halos pareho lang din sa atin. And it turns out that syempre, every year, minsan may naiiba, no? Just like in 2016, there were 252 trading days. 2017, 252. Tapos minsan 220, 251, minsan 253. But almost always, guys, 252. No? On the average, ito yung 252 trading days. Okay? So, if we're going to convert daily data or daily returns into annual, anong gagawin natin? You multiply it by 252. On the other hand, if you have weekly returns, tapos gusto natin maging annualize siya, gagawin natin times 52. Okay? And then if you have monthly returns, syempre, times 12. Okay, so that's what happens when we compute for the returns. No? Pag returns, guys, daily to yearly times 252. Weekly to yearly times 52. Monthly to yearly times 12. The same thing, guys, for variance. No? For variance or volatility. Ganon din yun. Volatility. So for example, daily variance yung meron natin, daily var to annual times 52 din yan. Okay? Get the idea, guys? Pag weekly var yung meron natin, gagawin natin yearly variance times 52, and then pag monthly, same thing, no? Monthly times 12. Now, it's different, guys, if you're computing for the standard deviation. Kasi pag standard deviation, syempre, you can get the standard deviation by multiplying it by by getting the square root of the variance. So daily, okay, daily. Kapag daily you guys yung natin yung standard deviation, para maging para maging para maging annual. Okay. It should be, what do you think, guys? It should be what? Anyone? Anyone? Answer, please. Paano makuha natin yung yung annual standard deviation? What do we do? What do we do with the daily standard deviation? We multiply it by the square root of 252. Square root kasi, di ba, itong variance na to, kung i-multiply natin ng 252, pag minultiply natin ng 252 yan, tapos kinuha natin square root, ito yun. We get the square root of 252. Yung weekly, convert natin, dapat square root of 52. Tapos yung monthly, square root of 12. Okay? So this is for standard deviation. Okay? But for returns and variance, what we do there is to multiply it by 252. Pag daily to annual. Okay, let's go here, guys. Kasi kinumplete ko na to, no? Para in the interest of time. So these are the returns of the stocks. Now, yung return natin kanina dito, this is average weekly, average log returns, weekly log returns. But if we want to convert it into annual, anong gagawin natin? Okay? So di ba kinuha lang natin yung average natin, di ba? Average times 52. Kasi weekly yung data natin, i-convert natin sa annual. So we're multiplying it by 52. So hanggang dulo yun. Okay? We just multiply this by 52. Ganun din, guys, si variance. We got the variance of the data and then we multiply it by 52 in order to convert it to weekly data kasi ito. Multiply natin ng 52 para maging annual data na to. And then si standard deviation, ayun. Standard deviation times the square root of 52. Okay? Okay, pause muna ako, guys. Questions? Clear ba siya? Pa-check naman, guys, kung clear so far. Feedback, please. Okay, thank you, Angeline. Thank you, Robert. Thank you, John. Okay, good. Thank you so much, guys, for the feedback. Okay. Any questions? Okay. Thank you, John. Jinyu, salamat. Okay. So, thank you so much for that feedback. Okay, so again, guys, summarize lang natin. Weekly kasi ito. Weekly data to, kaya ginawa natin, multiply natin yung returns ng 52. If it was daily data, guys, times 252 yan. Yung returns. Yung variance naman, times 252. Yung standard deviation times square root of 252. Okay? Alright. So, yung coefficient of variation, ganun pa rin naman yung formula. It's still the standard deviation divided by the return. Yung beta, yung slope pa rin naman. No? It's still the slope. Okay, and then okay, sandali may naisip lang ako. Nakuha kung pero hindi eh. Yung weekly, kung ginawa siyang hindi, masyadong malaki. Okay. So beta, up to now, guys, medyo palaisipan sa akin, it's a mystery to me that we're getting a beta that's really way off, no? Ang layo. Of course, guys, especially kung very volatile yung stock. Okay? Kasi ang difference sa atin, pag weekly, guys, you're getting more data points, di ba? So mas nakaka-capture mo yung movement talaga ng market. Lalo na kung daily yung ginagamit natin. Yung sa kasi monthly lang yung data niya eh. So you're getting just parang a summary for 1 month and then another month. So less 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 sensitive siya. No? Okay. Now we go to our formal discussion on portfolio management. Okay, remember, this is a topic on risk and return. So we said that, of course, any rational investor would like to maximize his returns sa kanyang portfolio, sa kanyang investments, and then minimize risk. Okay, so those are two objectives that any rational investor would want, yung principle of risk and return. Now, yung principle of risk and return in terms of stocks, no? It was formalized by Markovits, no, sa kanyang modern portfolio theory. Okay, so by Harry Markovits. So this was in the 1950s. Nobel Prize winner to siya for this for his work in portfolio management, in portfolio theory. Okay, so according to Markovits, okay, when you take a look at the portfolio, so there's a rational, guys, for engaging or investing in a portfolio. It's not good to put your eggs in one basket. Kunyari, isang stock ka lang. Kapag bumagsak yung stock na yun, bagsak na yung buong investment mo. Eh, pag nagdagdag tayo ng ibang stocks, guys, what happens is that the risk is minimized. Just like this diagram. So this is your portfolio risk. Pag isa lang yung stock mo, guys, maximum yung yung risk, no? Pero when you add more stocks, the risk is minimized. Okay? So ang question yan, ilang stocks ba yan? So there are different studies. Yung iba sabi 40, yung iba sabi 30, yung iba sabi 20. So you have a variation of studies that tells us kung ano daw yung optimal na number of assets, no? So depende siguro sa maraming factors siguro ang involved diyan. Okay? So if you notice, guys, yung portfolio risk natin, the more we add stocks, ito, number of securities, the more the portfolio risk goes down. And in this diagram, ito yung total risk, yung portfolio risk natin. But the total risk or portfolio risk can be classified into two. This one, diversifiable risk, and this one, systematic risk. Now, sa totoo lang, guys, ang pinaka-relevant lang dyan, itong si systematic risk. Ito lang pinaka-relevant. This is the only relevant risk. Bakit? Kasi the other risk, guys, can be diversified. Ibig sabihin, if you put on more stocks, you can mitigate against that risk. Okay? So if you have a bigger risk, guys, because you're not diversifying, then kasalanan mo yun. No? That's not good portfolio management. So good portfolio management tries to study the portfolio and take a look at how you can diversify your risks so that ang matitira na lang yung systematic risk or a little bit of that kasi siguro hindi naman kayang i-diversify lahat. No? So yung systematic risk na yan, guys, ang tawag dyan, undiversifiable risk. Okay, these are risks that an investment is exposed to that outside the control of the investor or the fund manager. Wala na sa control niyan. Kunyari, recently, maalingaw-ngaw yung news about Russian invasion sa Ukraine, no? Although that's very far from us, nasa Europe siya, nasa bandang Eastern Europe, yet alam natin, guys, na if something happens, if Russia invades Ukraine, that will send shockwaves sa global market. Eh ngayon, guys, yung global market connected na, network na yan. So affected din tayo niyan, guys. It will send shockwaves. And you can't do anything about that, guys, kung ikaw yung investor. Unless na talaga mag-pull out ka. No? Unless mag-pull out ka sa market. Pero you can't do anything about that kasi systematic risk yan. Okay, that can't be diversified away. Although, pwede rin natin sabihin na pwede pa rin i-diversify yan kahit paano kung may global stocks tayo. If you're invested in different countries, eh, pwede rin, in a sense, pwedeng mangyari yun. But generally, guys, you cannot anymore diversify the systematic risk. These are factors that are outside the control of the investor. Okay, so yun ang sinasabi natin systematic risk. And that's why it's the only relevant risk. Kasi yung diversifiable risk naman or the unsystematic risk, okay, so opposite lang yung pangalan niya, yung diversifiable risk or unsystematic risk that can be minimized by including by an intelligent use, intelligent analysis of the market and intelligent investment in several stocks. Okay, so yung portfolio guys, sabi nga natin, nakaka-mitigate ng risk yan. Okay, now so sa portfolio management guys, dalawa yung tinitingnan natin, returns at saka risk. Kaya nga risk and returns tong topic na to eh. Now last time we learned how to compute for the portfolio returns. We said that portfolio returns is simply, okay, simple lang yun, no? Return of the portfolio is equal to summation, okay, of the weight of the asset multiplied by return of the asset. Okay, so each asset has its average returns, and then ang tanong, ilang ang i-invest mo dun sa asset na yun? Okay, so assuming guys, kunyari, for purposes of example, let's assume that you have, let's do first with a 2-asset portfolio. Mamaya expand natin to. 2-asset portfolio, Apple at saka Microsoft, no? So alam natin guys, ang average return ni Apple is annualized return 36.22, si Microsoft 34.95. Okay? So these are the average annualized returns. Now, kung 50-50 siya, so therefore, mako-compute natin yung contribution ni Apple just by multiplying 50 times the average returns. Ito yon, WI times R sub I. And then si Microsoft naman, WI times R sub I. And then sum up lang natin. So this one was obtained by multiplying, okay, ilipat ko na lang tong 212 dito, no? I'll transfer it here kasi kinapi ko naman siya dyan. Okay, and then copy to the right. Mag-default to na malaking decimal place. 2 lang, 2. Okay, and then we add it kasi ito yung formula, summation. No? Okay, and we also learned in fact na kahit hindi natin kunin yung yung individual yung returns, kunin lang natin yung return ng portfolio, sum product niya at saka yung weights, sum product, enter, that's it. Okay, 35.89, 59. All right, returns guys, madali lang. Alam natin yung weights, alam natin yung returns, tapos. Ganun lang yun. And notice that the portfolio return will be lower than the highest return na ang asset, but it will be higher than most of the lower rated na asset. So parang lumalaro lang tayo sa gitna, no? Tsaka depende yan. Kunyari, pag mas malaki yung weight natin kay Apple, kunyari ito, if this is 80%, gawin natin itong 80. Okay, so dapat yung isa dyan 20%, no? Para maging 100% sila. Sira na naman ito. Nag-default siya sa 15. Okay. So what do we have now? 35.97. So it became closer to 36.22. Okay, kasi nag-80-20 tayo. Okay? So part of the problem, guys, part of the problem in portfolio management is to identify ano ba yung weight na dapat na kunin natin, ano ba yung combination. Is it 50-50? Depende din kasi yan sa factors, no? Hindi pa pwedeng, guys, kung gusto natin i-maximize yung risk, we might be tempted to think, di 100% na lang kay Apple. Kung 100% natin si Apple, ibig sabihin si Microsoft 0. Okay? Totoo na siya yung magbibigay sa atin ng highest returns, which is 36.22. Kaso nga lang, guys, sabi natin, gusto natin i-balance yung yung risk. Kung single security lang yan, sabi natin, then the risk of that will be higher compared to if we were having a portfolio of 2 assets, 3 assets, 5 assets, etc. Okay? So that's why importante yung concept ng portfolio risk. Now, ang question natin, how do you compute for the portfolio risk? Okay? So I think we already looked at this before. So at least ito, no? Ito. Sabi natin, ang portfolio risk can be computed using this double summation formula, quite a strange formula. And then it can be also computed using this one. So let's start from this one, a quick review lang. Okay, so let me go here. Let me write dito na lang. No? Okay, so the portfolio risk. So portfolio risk. Isin ko lang yung we said that the portfolio risk, which is denoted by sigma P, variance muna tayo, no? Variance is equal to double summation Wi, Wj, covariance of Ij. Okay, where I ranges from 1 up to ilan? Ilan ba yung asset natin? N is equal to 2. Dalawa lang, no? Ito naman J natin is equal to 1 up to 2 din. So this will involve just getting the pairs of I and J. Pag 2 asset portfolio, madali lang. No? Pag 2 asset, okay, let's explode this. Pag 2 asset, prepare lang naman natin, you know? So we have, ang pair natin ito, 1 with 1, 1 with 2, hanggang 2 kasi itong si J. Tapos pwede naman natin gawing 2 with 1, at saka 2 with 2. That's all, guys. Yun lang yung 4 na pairs na pwede nating maano. Pag 3 asset yan, paano? 1 with 1, 1 with 2, 1 with 3, 2 with 1, 2 with 2, 2 with 3, then 3 with 1, 3 with 2, 3 with 3. Ganun yung 3 asset portfolio. So by now, you must have noticed that the more assets, guys, the more stocks, the more difficult will be the computation for the portfolio risk. Pero don't worry kasi may shortcut naman dyan, which we're going to study in a while. So pag 2 asset portfolio, tingnan natin ha. So our numbers, our pairs will be 1 with 1, okay? 1 with 2, okay, 2 with 1, 2 with 2. Ganun lang. Tapos isa-substitute lang natin yung Wi, Wj. So this is W1, W1, di ba? 1 and 1, sigma 1, 1. Okay? Tapos itong ng 1, 2, W1, W2, covariance 1, 2. Then ito, W1, W2, W1, covariance 2, 1. And then W2, W2, covariance 2, 2. Okay, so we can now simplify this. And by simplifying it, guys, yun ang magiging ano natin, portfolio risk for a 2 asset portfolio. Okay, W1 times W1, that's W1 squared. No? W1 squared. What is sigma 1, 1? Pareho siya. Di ba ang sigma 1, 1 is the variance of 1? Okay, if we go back to our formula here, okay, dito ba? There, guys. Okay. The covariance of GSP with GSP is the variance of GSP. Okay, ganun lang kasimple, guys. So I'm denoting it as not as 1, 1, but although it's the same, so sigma 1, 1 is the same as sigma 1 squared. Isa lang yung number, no? Kasi in-square ko na siya. Okay, ano pa? What next, guys? Ito. So this is W1, W2. Hindi natin pwedeng square yan kasi magkaiba yung, pwede kasi magkaiba yung weights eh. W1, W2. So this is the covariance of 1 and 2. No? Ito naman, W2, W1, covariance of 2 with 1. Notice, guys, si sigma 1, 2, covariance of 1, 2, is the same as covariance of 2, 1. Kasi ang formula ng covariance, guys, you're getting the cross product of the deviations. No? Cross product lang. Ito. Di ba? Kahit pagpalitin natin to, di ba? Mauna man yung Rx minus R bar X kaysa sa Rg minus R. Pagpalitin din natin yan. Pareho lang, guys, yung covariance ni Xg at saka covariance ni Gx. They're the same. Okay, ganun din to, no? 1, 2, 2, 1, they're the same. So we can combine them. No? Okay, unahin ko muna ito para yung dulo. So yung dulo, itong W2, W2, this is plus W2 squared. No? Square siya. And then variance of 2. Okay, this is the variance of 2, sigma 2, 2. Plus lastly, guys, itong dalawang elements natin to. What's that, guys, if we add them? It's equal to twice 2 ng W1, W2, sigma 1, 2. Yan, okay? So that now is the variance of a two-asset portfolio. That's the variance of a two-asset portfolio. Ito. Okay? And therefore, the risk as measured by standard deviation is simply equal to square root lang natin siya. Okay? So pag alamin natin yung variance, pag kunin natin square root, yun na yun. Yun na yung ano. Now take note, guys, na tatlo yung terms na i-add natin pag two-asset portfolio. Now pag three-asset portfolio, guys, medyo iba na, no? So how do you compute kung ilan yung terms? Pag two-asset portfolio, tingnan natin kung tama tong formula, no? This one will give us kung ilan yung covariance, no? So pag two-asset portfolio, dalawang variance, 'di ba? Sigma 1, variance ng 1 at saka variance ng 2, at saka yung cover, ilan siya? Ilang covariance? Ang formula, n squared minus n over 2. So that will be n squared minus n, okay, divided by 2. And that will give us 1. Tama, di ba? Isa lang yung covariance natin sa formula dito. Isa lang siya. Sigma 1, 2, isa lang. So when we add this, i-add natin itong dalawang to, 3 terms, no? Tatlong terms ang kailangan natin for a two-asset portfolio. Now, we can copy the formula down. Okay, imagine, guys, pag 3-asset portfolio na, 6 na terms yan. How? Oh, quickly lang ha. Sigma 1, variance of 1, variance of 2, variance of 3. Tatlong asset. Tatlo yun, di ba? Ito naman yung covar. Saan nanggaling yan? Covariance 1, 2, covariance 1, 3. Covariance 2, 1, unique ha, unique. So hindi na yung 2, 1 kasi may 1, 2 na tayo eh. So covariance 1, 2, covariance 1, 3, and covariance 2, 3. Okay? Yung unique lang yung hinahabol natin, no? So there will be 6 terms, 6 na items na ganito, guys. Pag 3-asset portfolio. E paano kung mas marami? Kung 5-asset, 15 na yan. So you notice, guys, kung 20-asset portfolio natin, 210. Imagine, guys. Imagine yung pag-compute ng portfolio risk. Okay? If you have a big portfolio. Okay. Buti na lang, guys, may formula tayo. Ito. We have this formula where we use a matrix, no? Weight matrix, sigma matrix, at saka weight transpose matrix. Okay, I'll discuss this in a while. First, guys, gamitin muna natin yung portfolio risk nitong formula na to. Ito. So, isusulat ko siya dito. Okay, let me write it here for our reference. Sabi natin, ang variance ng portfolio natin, pag 3-asset is equal to, that's equal to W1 squared, variance of 1, notice yung variance naka-square siya, plus W2, variance ni 2, okay, plus 2 times W1, W2, covariance ng 1, 2. Okay. So we need, guys, we need the variance of 1, we need the variance of 2. Kailangan natin yung variance ni Apple, kailangan natin yung variance ni Microsoft, kailangan din natin yung covariance nila. Okay, meron na ba tayong variance ni Apple? Yes, ito, 8.97. Meron na ba tayong variance ni Microsoft? Yes, ito, 5.48. Meron na ba tayong covariance nila? Wala pa. So kailangan natin itong covariance na yan. Okay? So there's one table where we can have both the variance and the covariance, no? Sa isang table ando dun sila. And that's called the variance covariance matrix. So how do we generate the variance covariance matrix? Okay, simple lang. Yung variance covariance matrix, gagamitin natin guys yung data analysis na Excel. So kindly check your data. Tapos paki-check kung may data analysis dito sa analysis tab, no? Sa ribbon na analysis. And then paki-check nga guys kung meron. Excel tayo, data, and then data analysis. Kindly check please. Paki-chat kung meron kayo. Kung wala guys, sabihin nyo so that I can teach you how to access that. Okay, guys, paki-chat naman please. Okay, thank you. Okay, the rest. Robert, thank you. Trisha, salamat. Abigail, okay. Julia. Diyan, nagawa na ba? The rest, guys, let's give your classmates a few more minutes. Yung data analysis lang, guys, ha? Dapat pag clinic nyo si data, dapat may lalabas na data analysis. Most probably, guys, meron na kayo yan kasi nakailang DSI subject na kayo. Okay. Anyone who does not have data analysis? Okay. So we can generate, guys, the variance covariance matrix. Kailangan natin 'yun para sa formula natin dito at saka dito din, no? In both cases. So let's generate the variance covariance. Sabi natin, since two assets yung sa atin, we're going to use the returns of Apple and Microsoft. Ito siya. Nilagyan ko na ng pangalan sa taas para magamit natin yung label, no? So we want to get the variance covariance of Apple and Microsoft. Okay, so let's click data analysis. And then among here, mayroong ANOVA, may correlation. Okay, so we're going to use covariance here. Okay. All right. Input range natin dito will be L hanggang M lang. Okay. Take note guys, naka-hide yung data natin. No? Pero kung titingnan natin L2 hanggang M10. Okay. Sama naman lahat. No? Okay. And then group by columns, labels in the first row. Okay. And then kung ano natin, kung yung output range natin, let's put it here below. Ito lang natin ilagay. There. Okay, L229. Okay. L229. Okay, then we can now generate our covariance. There. Okay, so this one, it's a square matrix, no? This is the apple with apple. This is the covariance of apple with apple, or that's the variance of apple. Ito naman, Microsoft with Microsoft, that's the variance of Microsoft. So yung mga diagonals dito guys, kunyari 4x4 yan, 5x5, yung mga diagonals, sila yung variance. The rest are the covariance. Okay? So, ito guys, this is the covariance of Microsoft with Apple. And it's the same as the covariance of Apple with Microsoft. So, let's copy this, Control C. Copy natin dito, just the value. No? Paste special yung value. Okay, kinopy-paste ko yung value. Okay, so this is our variance, covariance. Covariance. Weekly to, no? Weekly kasi yung weekly variance, covariance to. Now, ang gusto natin guys, kasi ang ginagamit natin yung annualize, no? So let's copy this first. Control C. Control V. Okay, kinopy natin, no? Kasi i-manipulate natin to para maging variance, covariance siya na annual. Variance, covariance. This one is annual. Okay. So, how do we convert this, guys? This is variance, di ba? Paano natin i-convert si weekly variance into annual variance? Paano? What do we multiply it with? Guys, paki-chat nga please. We have weekly variance. We want to convert it to annual variance. How do we convert this weekly variance into annual variance? Paki-chat please. Paki-chat please. Guys, hello? How do we convert our weekly variance into an annual variance? Thank you, Abigail. No? You're correct. Times 52. Okay? Ang gagawin natin, times natin ng 52 lahat to. So, turo ko na lang guys kasi pag tinanong ko pa kayo, baka magtagal tayo. No? So, I'm going to multiply all the elements here, which I copied from here. No? I'm going to multiply all the elements here with 52 kasi we want to convert our variance, covariance into annualized variance. Okay? So how do you do that? Copy natin to, Control C. Yung 52 sinulat ko dito. And then ipipaste natin siya dito. Highlight. Okay, right-click. Paste special. Okay, paste special and then ito. Multiply natin. Yan. Yung paste special natin, operation, we're going to multiply 52 there to all the elements here. Okay. There. Okay. And then let me just format this. Okay. Okay, so this is our variance, covariance. The variance of Apple is 8.93%. The variance of Microsoft is 5.46%. And then the covariance of Microsoft and Apple, they should be the same, no? 4.668 yun, pareho sila. Okay, compare natin sa variance ng variance natin sa computation dito. Ang variance natin dito 8.97, 5.48. Ito 8.93, 5.67. Medyo malapit, no? May konting difference because of rounding off error siya. Okay, but okay na, okay lang, no? 8.97 dun sa taas, dito 8.93. Okay, questions guys? Questions so far? Paki-chat naman please kung okay so far, kung nakuha nyo tong variance, covariance na annualized. Okay, thank you, Robert. Yung iba, guys. Other responses, please. If you have any questions, guys, feel free to ask. Don't be ashamed. Okay, good. Thank you, Ian. All right. Sige, kung no more questions, sige, tuloy natin, ha? Okay, so let's now compute for the Let's now compute. Ilalagay ko lang ito dito. No? Yung portfolio natin. No? Let's now compute for our portfolio. No? Dito ko lang siya ilalagay. Portfolio risk, ito. So what's the formula for our portfolio risk? Sabi natin ito, no? W1 squared, variance of 1 plus W2, W2 squared dapat to, no? Sorry about the formula. I squared guys to what? I squared to W2 squared, okay? Variance of 2 times plus 2 W1, W2 covariance 1, 2. Okay, we're now ready to compute it. Okay, so this is equal to, lakihan ko lang para kita nyo yung ano. Okay, so this is equal to W1, ito, no? Of course, pwedeng 50-50 yan, no? Lagyan mo natin sa 80-20. W1 times, W1 squared. Okay, square natin multiplied by the variance of 1. This is the variance of 1. Diba? This one. That's the variance of 1. And then plus W2 squared. This is W2. And then square natin, W2 squared times the variance of 2. This is the variance of 2. There. Plus 2 times W1 times W2 times the covariance of 1, 2. Either this one or this one. Okay. Take a look at the formula, guys. Okay, and then enter natin, control enter. Control enter. Okay. So, gawin kong percentage. Okay. Ano pa yung kulang dito, guys? What's missing here? Okay, this is just the variance, no? So kailangan natin, guys, we need the risk. So we have to get the square root of the variance. Okay, square root of W1 squared variance of 1 plus W2 squared variance of 2 plus 2W1 W2 covariance 1, 2. And then you get, okay, 27.25. Okay, any questions, guys? Flash ko yung formula. Okay, any questions, guys? Okay. Kung no questions, compare natin, guys. Ano yung risk ni Apple? 29.25. Ano yung risk ni Microsoft? 23.41. Ano yung nakuha natin na portfolio risk? 27.25. Mukhang it was not really able to achieve the purpose, no? Kasi of course, with respect to Apple, mas okay siya. But with respect to Microsoft, mas mababa siya, no? Kasi 27.25% to si Microsoft, 23.41. Okay, so did it really defeat the purpose? No, not necessarily, guys. Kasi ang naging problem natin dyan, itong weight natin. I-adjust natin yung weight ng konti. So what if, kasi mas maliit nga yung risk ni, ni Microsoft. Tapos kung ang objective natin babaan yung riskiness, then what if I make this, pagbaliktarin ko siya 20%, tapos ito 80%. Okay, so what happened now? Sige, una muna, 50-50 muna. No? So if this was 50-50, 50-50, okay, so mas mababa pa rin si Microsoft, no? Of course, mas mababa siya kay Apple. Okay? So may compromise tayo dito. Ang returns natin 35.59%, okay? Mas mataas siya kaysa kay Microsoft, pero mas mababa siya kay Apple. But let's see, what if we change it to 40-60? 40 and then 60. Suppose our objective is really minimizing the risk, no? So mas mababa pa rin si Microsoft. Okay. Next meeting ita-target natin na paano ba, ano bang magandang weight, ano ba yung magandang portfolio weights natin para yung ano ni Microsoft mas mababa pa siya kaysa dun sa risk ni Microsoft. So let's try 30-70. 30-70. So nagta-trial and error lang tayo dito, no? Okay, ito 30-70 guys. 30% kay Apple, 70% kay Microsoft. Mas mababa na kaysa dun sa kay risk ni ni Microsoft. Ito 23.32, ito 23.41. So the point here guys is that it is possible to come up with a portfolio which minimizes really the risk in such a way that yung risk ng portfolio natin mas mababa pa kaysa dun sa pinakamaliit na risk. Yeah, that's what we're saying here, no? Okay, although syempre ang fallback niyan mas bumaba yung returns natin. Okay? So we have to choose an objective really, no? Pag ang objective natin is pataasin yung return as much as possible. So malamang yan, mas iloload natin yung kay Apple kasi mas mataas yung performance ni Apple. Okay. So any questions guys? Clear so far? Okay, I'm pressed for time. So ganito na yung gagawin natin, no? There's another way to compute for the risk, and that's this one. Okay? Kasi ito, hassle to. Guys, hassle tong formula natin na to. Paano kung 10 asset portfolio, di ba? Ayun, no? 10 asset portfolio, 55 terms na ganyan, good luck. Magkakaroon ka ng W1 squared, sigma 1, variance 1, hanggang 10 yon. Tapos yung pair, 1 with 2, 1 with 3, 1 with 4, hanggang 1 with 10, tapos 2 with 3, 2 with 4, etc. All in all, 55 terms, no? 10 yung variances, 45 yung covariances, all in all 55 terms. And we don't, of course, it's good luck sa atin kung ima-manual natin yan. So, gagamitin natin ito. It can be shown guys that yung formula na yan, yung manual formula natin yan, that can be replaced by a matrix formula. So, ano yung matrix formula na yun? Yung matrix formula na yun, ito, W times sigma times W. We just have to follow rules on matrix multiplication. Kasi hindi tayo basta-basta pwede mag-multiply sa matrix, no? Kailangan susundin natin yung matrix rule. Ano yung rule na yon? Okay, tingnan muna natin yung size ni weight matrix. Yung matrix natin, yung size niya, ito. Ito, di ba? Ito yung size, yung weight matrix natin. It's 1/2. 1/2. Okay, 1 row by 2 columns. 1 row, 2 columns. Anong size ni variance covariance matrix natin? It's 2/2. 2/2. 1, 2, 1, 2. 2 rows and 2 columns. Now question, pwede bang i-multiply si weight matrix at saka si variance matrix? Yes. Bakit? Kasi yung column ng unang matrix is the same as the row of the first matrix. So dapat magkapareho yan guys. Kung hindi magkapareho yan, hindi pa pwede. Kaya hindi pa pwedeng commutativity sa matrix, no? Kasi kung ibaliktarin ko yan, gawin kong sigma at saka W. Itong sigma, ito yon, no? Ito. Yung W natin, ito. So magiging ito 2 by 2 to. So this is 2 by 2. And this is 1 by 2. O, pwede ba yan multiply? Hindi. Yan, no? Tignan nyo. 2 at saka si 1 magkaiba, so hindi pa pwede yan. Okay? So very strict yung rules of multiplication sa matrix. Hindi scalar or hindi arithmetic yan na 3 times 2 is equal to 2 times 3. Hindi ganon. So W sigma, pwede. Sigma W, hindi pa pwede. Okay, ang resulting matrix ng W times sigma is 1 by 2. Okay? 1 by 2 yan. Pag minultiply natin yan, ang size yan, 1 by 2. Tapos yung dulo guys, ito. Kaya may T tayo dito. Yan, may T tayo, which is transpose. Ibig sabihin, yung weight matrix, ita-transpose natin. Okay? So anong size ito? Yung resultant matrix is 1 by 2. Ano si weight matrix? Si W guys, si weight transpose pala, no? Si W is 1 by 2. Pag transpose natin, mababaliktad yan, magiging 2 by 1. Okay, kasi transpose binaliktad natin. So, multiplicable ba siya? Yes. Kasi 2 at saka 2 pareho. Ang resultant matrix, ang resultant size is 1 by 1. So tama, iisa lang talaga, no? Isang cell lang dito sa Excel. Okay? So let me quickly demonstrate how this is done. Okay, kunin ko lang yung gagamitin natin guys gagamitin natin unang-una W times sigma, no? So we're going to use the mmult kasi may mmult function kay Excel. That's matrix multiplication. Mmult ng ano muna? Okay guys, matrix multiplication ng W at saka sigma. So this is our W, di ba? Dili lang. Tanggalin ko nga muna ito kasi nakakasagabal siya dun sa cell. So this is equal to mmult. Mmult, okay? This is our W. Tama? Weight matrix and the variance covariance matrix ito. There. Yan yung unang step, guys. mmult, no? So meron na tayo nito. Tapos may isa pa tayong mmult. Kasi i-multiply pa ulit natin ito eh. So it will be the product of this one, which is this one already, no? Itong W sigma, ito na yon. And then i-multiply ulit natin. So maglalagay ulit tayo dito sa harap ng mmult ulit. Mmult nino. Itong result ng W sigma at saka, so may comma tayo dito, and W transpose. Paano natin ilalagay yan? Transpose. Transpose ng weight matrix natin. Okay. There you go, guys. So dalawang matrix multiplication, dalawang mmult. Kasi dalawang beses tayo mag-multiply, tapos yung isa naka-transpose. Okay, I'll give you a few seconds to work on that. And do not press enter, guys, kasi when you're dealing with array formulas, you should press, ang ipipress nyo dapat, okay. Tapos, sandali, meron pa pala tayong and then guys, remember this is just the variance, no? So kailangan natin ilagay yung square root. So medyo mahaba-haba yung formula. Okay. Square root, then control shift enter. There. Okay, ano yung kulang ko? Ayun, sorry. Mali guys. Maling ito dapat yung ginamit ko, no? Ito. this one. Yung annualized. Okay, Control Shift Enter. There, parehong-pareho. No? Okay, guys, paki-chat naman kung okay so far, kung may questions. I know guys na medyo parang may kahirapan pong formula na to. No? But imagine guys, if you are working with 10 stocks, what would you rather guys add 55 items or just use this formula matrix, Control Shift Enter that guys ang ano nyo So dapat Control, kasi array formula to, Control plus Shift plus Enter. Okay, so that's what you should use, no? Control Shift Enter. Okay, any questions guys? Paki-chat naman please guys kung nakahabol, kung yes. I would appreciate your feedback para alam ko kung nakakahabol kayo o okay, thank you Abigail. How about the rest guys? Sana may kalahating makapagano. Thank you Robert. And dalawa. Angeline, salamat. No? Thank you. John, salamat for banning. Jaime, thank you. 5. Okay, good. Keep it coming, please. Okay, Christian, salamat. Julia, salamat. Okay, good. Good. At least nakakalahati. No? Okay, yung last guys, ito ituturo ko na pinakamabilis talaga. No? Pinakamabilis. Mas madali pa dito kasi nakakalito din to no? Now, ito M-Molt din. M-Molt, pero isang M-Molt lang siya. Kasi may shortcut na ginawa. No? So it's the M-Molt of your weights. Okay? Weights and your variance covariance. Hindi ito guys yung annualize natin na ano. Okay? Tapos guys, ang mangyayari nito, okay, isa sum product natin siya. Sum product, okay, ng M-Molt at saka ng weight ulit, no? Weight. So 2 times natin yung weight, hindi siya naka-transpose. Kasi ang ginagamit natin yung sum product. So it's a combination of matrix, M-Molt, at saka scalar to yung sum product. Of course, we have to get the square root of this, SQRT. Okay, for me guys, ito yung mas madali, no? Kasi isang M-Molt lang tayo, kino-combine lang natin si M-Molt at saka si sum product. Okay? Unlike this one guys na may dalawang M-Molt at saka isang transpose. Mas nakakalito yun. Alright, then this should also be Control Shift Enter. Control Shift Enter. Okay, parehong-pareho guys. So whether you do it manually like this or you use yung strict na M-Molt, tapos transpose, or you use the sum product M-Molt, you'll get the same portfolio risk. Okay, so dito guys, if you're using this ratio 30-70, you will have a portfolio. Yung portfolio natin, may returns na 35.34, okay? Lower than Apple but higher than Microsoft. Ganun talaga mangyayari sa returns. Pero yung risk niya, mas mababa compared to any of the two here. Okay, so we were able to prove guys that indeed ito pag nagdagdag tayo ng portfolio tapos we were able to come up with the right combination, we will be able to minimize the risk, to diversify the risk. Okay, any questions guys? Any questions? All right, so next meeting ang gagawin natin guys dito sa next we will expand our analysis a bit. Ang gagawin natin guys, we're going, may question. Okay, thank you Abigail. We're going to do ilipat natin to. 8 assets ang gagawin natin, no? As a preliminary, sorry. Control C. As a preliminary, guys, ano lang natin yung may konting minutes pa tayo. Yung variance covariance nito. No? So let's compute for the variance covariance. Okay, so let me just show you a quick way to do this. So again, data tayo, data analysis, covariance ulit. Okay. And then yung ano natin, yung variance covariance natin is Apple hanggang GSPC. Okay, so sumobre to, dapat 210 lang. L210, no? Hanggang dito lang sa L210. At L2 hanggang T210, there. Columns, may labels tayo sa first row. Okay, transfer ko guys dito kasi kanina nasa taas, binaba ko siya para ang advantage yun, magkaka-labels yung ano natin. And then let's put it, dito natin ilagay sa taas dito. I'm going to put it here sa V4. Okay, V4. Okay. There you go. Okay. So we now have the variance covariance of Apple, Microsoft hanggang GSPC. Ito yung mga variances nila guys, yung nasa diagonals. Okay, you can check that. Okay, tapos ano to, weekly to, no? Weekly kasi yung data natin, weekly siya. We're going to convert it into annual. So copy natin to guys, copy natin. Let's copy this. Control C, Control dito, Control V. Okay. All right. Now, kulang pa tayo dito? Kulang pa. So, ang pag i-equal lang natin yung ganyan, ang tagal niyan, no? O kaya magta-transpose tayo matagal. So, I'm going to show you a quick way to populate this. Yun ang yun ang ginagawa ni Excel, ang binibigay lang niya yung lower bottom, no? Ng variance covariance. But we need to populate this kasi pag ginamit natin sa computation, no? Guys, it's already time. May I have a 2-minute extension? Okay lang ba? Permission, please. Just to finish this, kung okay lang. With your permission, class. Kung pwede, dagdagan pa natin yung ano. Okay, but if you need to go, guys, you may. I'll just finish this. For those of you who can still remain, please do so. No? So, thank you so much for the permission. Kailangan natin, guys, dun sa formula natin na weight sigma, weight transpose, kailangan natin kompleto to. So, gagawin natin dito, kami natin, Control C, Control V. But this time, annual na siya. Annual. Okay? Annual siya. Okay, so how do we now fill this up? Okay, in order to do that, guys, ang gagawin natin, ika-copy natin to, tapos ita-transpose natin dito. No? So the quick way to do it is techniques to, no? Copy this, Control C, copy natin, and then ipi-paste natin dito yan. Paste natin dito. Okay, here, paste special. Okay, ano ipi-paste special natin? Yung mga values. Tapos skip blanks. Ibig sabihin, hindi niya i-convert yung mga blanco, yung may mga laman lang, skip blanks and then transpose. So ita-transpose yan, parang ibabaliktad niya since ang ano naman, ang bottom at saka top part, they are mirror images. No? Okay, there you go. If you check guys, ito, 0.002116, ito yun. No? Okay. Ayan. No? So, nakumplete na natin yung ano natin. Nakumplete na natin yung variance covariance. And then, of course, convert natin. Multiply that by 52. Again, yung shortcut natin, guys. Control C, copy natin to. And then, diba? Paste special. Multiply natin. Multiply the 52 to all the items here. Okay? There you go. Tapos, gawin lang natin ano, Gawin natin percent home. Percent kahit tatlo lang. 3 decimal places. There, guys. That's now our variance covariance. Okay. All right. So we're going to continue with this next meeting, guys. Pero at least meron na tayong variance covariance. Ito na yung gagamitin natin for next meeting. Ito na. In fact, pwede natin, kasi since lagi natin gagamitin to, pwede natin bigyan ng pangalan to, no? So I'll call this var covar. Gagamitin kasi natin yan sa pag-enter. Check ko nga. Highlight this. Ay, hindi. Sorry. Mali, guys. Mali. Dapat ito lang, no? Ito lang dapat. Hindi natin isasama kasi sa portfolio natin si GSPC. So, highlight that. And then dito, var covar. Enter. I-correct na lang, no? Kasi nagkaroon ng pangalan na ito, eh. Ito, papalitan na lang natin ito. Paano papalitan yon? Control F3. Control F3, yung var covar. Yung dalawang yan, i-delete muna natin. Delete. So wala na yung var covar. Close. Ulitin ko na lang siya. Hanggang Intel lang, guys. Hanggang Intel. Hindi natin isasama sa portfolio natin sa GSPC. Then var underscore covar. Enter. There. Okay? So yun na yung var covar natin. If I check, var covar, there. Okay? So let me stop recording.